Good morning, Cam. Good morning, everyone, and welcome back to another episode of Trading Success. How are you?
Yeah, good. Thanks, Chris. Yep. How are you doing today?
Very well, very well. Sun's out. It's a little bit brisk this morning, but it's going to be a beautiful day, I can tell.
Yeah, it's a beautiful time up here on the Gold Coast. So hopefully we'll get some nice dry weather for the next few weeks after
Yeah,
we've had such a wet year so far. So
I know.
lovely to see the sun out. Yeah, let's get into these markets, shall we? Because there was an interesting week last week, and we talked about the balance rules that we were looking for. And I'd like to sort of go through that again, just to review those balance rules and how they played out.
Yep.
But also, too, we had a lot of news as well last week as well. So let's just go through some of the news that came through. I'll just share my screen and just we'll look at the Ninja Trader, not Ninja Trader, Forex Factory, which is our site that we use for news. I just want to share my news screen. So we had a fair bit of red flag news that really didn't do much with the market, but on Friday we had the PCE news, and it came in better than expected. So that would have been a good number for the Fed Reserve when they saw that number under 0.3. So obviously this is all about, the PCE is for those people that want to know, it's the personal consumption expenditures. So it's got a lot to do with the consumer price index, the CPI. So it's something that the Fed Reserve pays a lot of attention to in terms of the inflation. So, believe it or not, it looks like from that number, it looks like they've got that inflation under control on that level. So interesting to see how it played out in the market. So, because that's really all that matters, right? Like this data, you don't know how accurate it is, but it's what the Fed Reserve goes off when they talk about when they decide on interest rate policy. And that's what really seems to be driving markets at the moment, is this expectation of interest rate cut and when it's going to come out. So if we look at the charts, while we're on news, let's have a look at what we got this week, because we had a very strong reaction to the PCE last week. But this week, what we've got coming up is employment news. So Friday, we've got a fair amount of employment news. So we'll see if the market, what it does in terms of the balance range that it's in again. But Friday should give us a little bit more of an understanding of how the market's going to react to an anticipation of what the Fed's going to do in the upcoming meetings.
Yeah.
I think the FOMC will be coming up later in the month, I believe. So let's have a look at the chart, shall we, Chris, and see what's happening. Now, I'm going to go into the S&P 500 first. Now, this was that balanced range that we spoke about last week on the Nasdaq and the S&P. So that was from last Thursday. We created that balance range, and the market, you can see how we got out of that balance range on Wednesday.
Yep.
And then we actually continued and we traded lower on Thursday, and Friday actually went quite low as well. Market really sold off quite strongly. Now, I think there was a lot going on with the Trump, the 34 charges. He's been charged with 34 felonies. So I think market reacted to that, how we had that sell-off. And then I think after the PCE news, the market just rallied. And look where we are. We're back into the balance range. So once again, I would see this balance range here, because we're back into balance. I'd be looking at how the market reacts to this balance range again. So I'd be watching the low down here at around 5275 to see if the market can find that area as support. If we can find support, then look for longs to the high side. If we fail at that level, then we look for shorts and look for reversals trading back lower.
Yeah.
Now, the Nasdaq did fairly similar things. Let me see if I can find the Nasdaq. The Nasdaq didn't get back up into its range. So you can see that was the balance range there for Nasdaq. And Nasdaq was a little bit weaker. Didn't react as strong. Incredible volatility though. Like if we look at the 60-minute chart on Friday, look at that. Like the market opened, I'm not too sure where it opened. The 30-minute chart will show us sort of where we opened. So that's where we opened on Friday. Okay, so this is the 30-minute, the cash market, so the regular trading hours. So it just opened and sold off straight away.
Yeah, it's like 3 hours of selling there.
yeah, absolutely. And then as soon as we broke that around that 18,300 level, found support down there, and then the market just trended and closed higher. But if we go back into this daily range, we're still not back in balance here. So, you can see we've opened, this is Monday's trading here in the Asian trading session. So we've opened, pretty much right on pretty much where the market closed, very close to it. And the market's just, a little bit just finding its feet. But it'll be interesting to see if we can get back into this balanced range again, a bit like what the S&P has done.
Yeah.
S&P is a little bit more bullish at this stage than the Nasdaq. So once again, use those balance rules. Watch that low from that day there, that Thursday low around the 18,600 level. The market can get back up into that level, then look for longs back up to the high side. If we fail at this level, then look for shorts. Pretty simple trading strategy, really, using those balance rules. They can give you some really good levels on the higher time frames. So I think the smaller time frames have been a little bit more tricky to trade. Though we had some very good trading in the European session last week. We got some very nice trades in that session, but it's been pretty tricky trading those European sessions because it just seems like US has been really where the price action has been, where the volatility has been in the markets.
Yeah, especially at the open, I've noticed if you look at that sort of 11 o'clock, 12 o'clock, our Australian time frame, it's just that's where all the volatility and movement happens very quickly.
Yeah, absolutely. Yeah, the US traders are still driving the financial markets, and everyone wants to know how the US traders are faring, and that's where a lot of the big money still comes into the markets, and the big moves come in from there. So that's pretty much a wrap with the NQ and the S&P 500. Those indexes, I think later in the week we'll see a little bit more of a stronger direction, but I think we're going to have quite balanced trading this week. Quite range-based trading. Let's have a look at the indexes. The commodities. The commodities have been a little quiet. Oil. I was expecting oil to be a little bit more bullish off these levels, but you can see we've had a retest of this 50% on Friday, and we are back into balance, and we've got this expanding range. And basically what an expanding range is just means that the ranges are getting larger. So if we, look at this, you can see how the ranges are getting larger and larger on the daily chart.
Yeah.
So, we'll probably maybe getting a test lower, maybe even down to the 61.8 fib this week on oil. If oil can't hold the 50% level, like we've been down here 3 times, there's a strong level of support here. If we can't hold that level, then there's going to be a lot of, shorts coming into the market. So that's one to look for oil this week. There could be some really nice, hard, sharp, short opportunities on that time on the daily time frame. If we look at gold one has also been pretty weak. Last week we were we're kind of in a, we're in this imbalanced move to the high side back in early May. And then you can see we've created this liquidity zone up here. So there's a lot of resistance up here now around 2,400 to 2,460. So gold has really found a ceiling here. Now we do have some support down here back around 2,300 area. You can see here we've got a liquidity zone. This is one of our IDTA indicators as well, which we find works incredibly well for the shorter term trading. So we've basically broken under the liquidity zone on the daily chart for gold. So it looks like we're going to see a continuation, maybe back down to, or a reversal back down to 2,300. But if we look at the structure, the market is in imbalance to the downside. So we've pretty much filled out this imbalance zone here now.
Yeah.
So again, the market was out of balance going to the high side, stepping up. We had basically 3 big legs to the upside, virtually one real swing up, and now we've swung up. We've swung down here, we've swung back up, and now we're swinging back down. So looks like gold could be showing some short-term weakness at the moment, but be interesting to see where we're in. We're kind of got this. I would say this is a balance range we're in right now in the short term. I'll just draw a box over what I think is the balance. So we've got like 1, 2, 3, 4, 5, 6 days of balance now. We broke out of this balance zone here on Friday. Actually, this is probably, I might need to update the data on this. This might not be correct data. But it looks like what we've done is we've broken out, and I'd be watching that around about that 2,325 area. If the market can find some resistance, if the market comes back into this area, see if it continues to rally short from that level, or we're going to see a continuation back off this trend indicator and back to the top of balance.
Yeah.
So watching that 2,325 around that level would be a price to watch for on gold to see how it behaves. Could be a very strong pivot area in the market. And finally, our Bitcoin futures contract. This is a 4-hour chart. Market is very much struggling to break out of this trend line.
Yeah.
It showed like it wanted to break out early last week, end of last week, it tried to break out. This week, we're in a very balanced range. If we look at the daily chart, you can see here we're very balanced at the moment. So I would be looking at this as the balance range right now. If I was looking at how the market's faring. So our balance is really between that 7,100 level and the 50%, which is down at 66,300 area. So that to me is the balance zone in this market right now. So I'd be looking for, a retest of say 66,000. So I think there might be some really good long opportunities off there. And you're looking at this trend indicator as well. So it's still holding above the trend indicator. It is still trying to trade higher. But we've got resistance to the high side up around about 70,000, 71,000. So once again, those balance rules are in play here. I'd be looking for support down around the 50%, which is around 66,000. Looking for, I think, buying opportunities down there would be nice. And then, looking for selling off this trend line and this 70,000 level. But if it breaks through that level very strong and it can hold above, then this is where we'll probably see the breakout. So look, we are in that 12-month cycle after the halving, and that's especially in the past we've seen Bitcoin be very bullish in its price ranges. But, the market's just fairly balanced at the moment. We're not seeing any huge volatility. The inflows are a little bit low in the Bitcoin. And also, I think a lot of money seemed to go into Ethereum last week. I think, Chris, you were saying I think we had 8 Ethereum ETFs were approved last week. And we saw Ethereum actually show a lot more strength last week than Bitcoin. So a little bit more, I think, speculator money was going in, or short-term money was going into Ethereum last week.
Yeah, and that's keeping it interesting, that's for sure. And even looking at that chart, if you look at it from a daily point of view, that's still, what's that, like a 5,000 point move. Like, it's, if you break it down to the 5-minute charts, there's a lot of opportunity in there.
Absolutely. Yep. And another interesting point too, it's, on this daily time frames, it's holding above that 50%.
Yeah.
And if markets are holding above their 50s, and still in this upwards trend, then you still got to back the buyers. You got to still act. You still have to. You feel like the uptrend is still in place. So yes, I think buying off these lows when it comes down and finds support. I think just being patient and waiting for the market to get down there, and this is what a lot of our trading strategies are all about, is just buying off those strong support areas, buying off those liquidity zones, or selling off those liquidity zones up to the upside when the markets are showing balance type behavior. So I don't think we're going to see too much fireworks in the market this week, but I think wait till the end of the week where the employment news comes out, because that's one of the main numbers that the Federal Reserve uses when they're looking at interest rate policy, and that seems to be what's driving everything at the moment. Yeah. One thing also a note about last week's trading, which was quite phenomenal. It was if we look at I'm just going to bring up the S&P 500. If we looked at just how, the market was just in this downtrend. This is the 30-minute chart. So it was just trending down pretty much all week long. And then when we came into the open on Friday, and obviously that Trump news with all those 34 felony charges, I don't think the market liked that very much. But then it just recovered on that PCE news. And it went up initially on the PCE news because the PCE news came out at 10:30. So the market reacted really strongly. Yeah. Then the market sold off. And then we had a big short covering rally. So anyone, I think, that was short here, and a few shorts during the week as well, got triggered. Now, sometimes a short covering rally can actually weaken a market as well. So that's why, I'm definitely not discounting some more short selling this week. But I think the short-term shorts got covered and got picked off, particularly these ones on Friday got taken out pretty early. So, markets can swing within the day timeframes and the shorter timeframes. The markets can swing up and down so radically. So, and this is what we tell our day traders is, don't really fall in love with a particular trend or a direction in the market. You can't be fooled by your longer term biases, because the markets can move particularly strong, particularly in these US sessions. The market can move, a huge amount of distance in a short amount of time. Yeah. So there can be some great volatility. So from 2:30 to 6 o'clock, the market moved basically 400 ticks, which is a 400 tick move is that's a big move. A lot of our traders are happy if they net 100 to 200 ticks a week. There's a lot of that. That's a good result. If you're netting 100 to 200 ticks a week on the Nasdaq, you're doing quite well. We're doing very well. Being positive. Not many traders are achieving those types of numbers. But if this market moves 400 ticks in one trend, this is really, really powerful. That if you don't need to be trading in the markets all the time. It's all about timing and being there at the right time. And one thing you can do about timing trades is being around markets when there's news, like trading around news. Will give you a higher probability of markets are moving. So if you're someone that loves their trading, but you just find you just can't get the time to trade, I would, at the start of the week, I'd very much look at when the major news announcements are coming out, the financial news announcements, or if you hear of any news during the week that's going to have an effect on the market. Like, for instance, the Trump news, all of that stuff, all of that emotional stuff, right? Emotions move markets, all right? But the one thing about emotions as well, typically emotional market moving is not stable. And this is, I think, what we saw on Friday. We saw a lot of emotion, particularly from that Trump news, and then look at the reaction, so emotional traders, and I think a lot of this was algorithmic trading as well, just not so sustainable. And then the market just rallied and recovered very, very strongly in that Friday morning session. So just be mindful, emotions can give you good moves, but it can also be taken out as well. And we saw all these shorts taken out on Friday in the US cash market early, and then the close, the market just recovered. And like on a 5-minute chart, these moves look like insane. Like look at this on a 5-minute chart, Chris. Like the trend was just bonkers. Like the market went all the way from the S2, found support above the S1, and then just kept rallying and rallying and rallying, and then pretty much went to the R3. So the market moved from the S2 to the R3 in one day.
It's a big move when you look at it like that.
And this is one thing too for beginner traders to really get their head around, is that when markets move, a lot of the market movement is based on inventory and markets either getting too short or getting too long, particularly if markets are fairly balanced. And in this situation here, the market got very short. It got long on, so the gap being the neutral position here, on the PCE news, market went long, then it sold off. And then we went back to the gap on open, and then we sold under the gap. So we went short. The market was net short here. But then the market just recovered and rallied, and then we went back to neutral, and then we just went net long again. So all of this shorts here got taken out by these longs here. So the market finished net long on the day. So this is an important way to look at the story of the market and how it unfolds, and sets you up for, I think, great success as well, not being so narrow-minded as well, and being a bit more broad-focused and starting to understand a bit more about how inventory gets rebalanced throughout the day. But I think one thing to remember too, emotional trading tends to weaken a market, and particularly the short covering that we saw, this long move that we saw on Friday, that can also weaken a market as well. So I think, watch for a retest of these lows early in the week. But I think if the news comes out fairly bullish leading into Friday, I think the market will maybe go and retest those all-time highs again.
Yeah.
So we'll see if that plays out this week, right?
Yeah.
So
we'll
review on Monday to see how accurate we were with that.
Fantastic. No, that sounds awesome. Thank you, Cam.
Thanks, Chris, for doing this, and thanks everyone for joining in. Hope you're enjoying it. And this week we've got our global support webinar as well for the members. So make sure you tune in on Thursday for that. We're going to be going through some of the the content that we use in the Platinum program. So if you're interested in finding a bit more about a few more advanced techniques that we use to help us read the story, we'll be looking at some of those techniques like liquidity zones and some volume analysis as well. So hopefully we'll see you there, guys, at our Global Support webinar this Thursday.
Excellent. Amazing. Fantastic, Cam. Have
Thanks,
a great
Chris.
week.
You too. Have a great week, everyone.
Bye-bye.
Bye.